So I'm going to spend half an hour and give you a little bit of an overview on what we refer to as frictionless finance. So frictionless finance to us covers a range of different elements. So what we want to touch on at the beginning is why bookkeeping and accounting and running a business is really difficult. The need to get paid, future automation that makes this a lot easier, and digital payments and lending, so how we see innovation impacting the way that small businesses will be able to get finance, manage their businesses, and run their businesses more effectively. But just kicking off, and if you don't know who we are, so we're Xero. We're an online accounting company based here in the UK, down in Milton Keynes and London. But we have a relatively simple mission, and we're a small business kind of only solution. And that's to enable small business economy to thrive through beautiful software, advice, and connections. And the connection bit to us is really, really important. So here's a short quote from one of our customers who talks about the value of being, once they were a startup, the value was the connection, so actually being connected to their colleagues, to their accountant or bookkeeper, and also into the ecosystem, so the other products, so maybe CRM or point of sale, whatever those solutions are that they need to run their business more effectively. And the future of technology and where we are right now allows us to start to sync the products together. But we all know that running a business is really, really difficult, certainly from an accounting and finance perspective, because unless you're in a bookkeeping or accounting business, it's probably not your core competency, and tax and accounting can kind of seem like a little bit of a dark art. You've got complexities, so a lack of time to do this stuff. We're acutely aware that the bookkeeping is often done in the evenings and the weekends in lots of cases, or at the end of a quarter prior to a VAT return. You've got challenges with finance, so actually like money coming in and out, a lack of funds in some cases, and cash flow troubles going on. And as I said, the dark art of tax. Actually, am I set up? Am I paying the right amount of tax? Am I covering everything that I need to? Then on top of that, we now seem to have all of these other compliance elements coming in. So we've got GDPR, we've got MTD, so more and more complexities that actually start to take small businesses away from doing what they're great at, and ended up having to focus on compliance, bookkeeping, accounting, finance. And this may look familiar to some people's offices, or kind of Saturday night with a glass of red wine trying to get your bookkeeping done. There's paper everywhere, you're missing receipts, and there's a recent survey done by Capital One, I think, that said the average amount of money and somebody running a small business will lose is about £105 per year due to lost expense receipts or unclaimed expense receipts. So it really starts to add up when you talk about there being 5 million businesses in the UK and 99% of them being small businesses, 1 to 9 employees. So historically, lots of paper, lots of manual work, and what we're trying to do then is move away from that and automate as much as we possibly can. So that takes me into how we then start to fix small business productivity. So for the UK, actually, surprisingly, GDP is pretty unproductive. So if you look across lots of the other regions, you've got the G8 there, excluding the UK, we don't stack up that well. So as a country, we're pretty unproductive. Small business survival rates are quite scary. It's okay for year one. Actually, 91% of businesses survive year one, 97% if they're on Xero, probably a bit more control of their finances there. Roll forwards 5 years, and less than half of those businesses will still be operating. So only 41% will still be surviving. So there's a huge challenge of how do you navigate the murky waters of the first 5 years. Once you get past that 5 years, the likelihood is you're set up and you're growing, or you're certainly at a size where you can sustain what you're doing, but that first 5 years can be really, really challenging. And other small businesses are relatively lax with paying their bills. Like 91% of invoices are overdue. So people just aren't paying on time, which, if you're a small business, has a huge impact on cash flow and being able to collect money there, which is why you'll see an influx of businesses have kind of been born out of this lack of, I guess, systemization of people paying invoices, and now you can do kind of drawdown finance on unpaid invoices through businesses. So that kind of market has spun up over the last few years, but it doesn't seem to be getting a huge amount better. So we're really keen to start to try and address that, and I'll cover some of that off in a little while. So we know that lots and lots of people, lots of small businesses maybe aren't paying their bills on time, but 99% of businesses in the UK are small. 60% of UK employment is within small businesses, nearly half of all UK turnover, and 1 one business every minute was created in 2015. So it's huge, and it's getting bigger and bigger as we talk, as more and more people are going into self-employment and starting off small businesses. But the other side of that, and the challenges that we then see that small businesses have, and what may then relay back to the only half of businesses are going to survive the first 5 years, 72% of small businesses have no business plan. 40% of them don't use any experts, so they don't have an accountant or a bookkeeper or a solicitor for certain things. Actually, they're out on their own, trying to do everything themselves, keeping costs down, trying to run their business, but actually they aren't dialing into any experts. And nearly 40% of them aren't using any technology within their business. So then the question is compliance kind of harming productivity? So there's a high instance of what we call DIY accounting. So spreadsheets, pop into Coleman's or any stationery shop, you can still buy the kind of red books that you can go through and kind of do your cash book in there. So lots and lots of people doing lots of manual work to try and keep costs down, but try and keep up to date with their bookkeeping just there. We've then got things like auto-enrollment. We touched briefly on MTD and GDPR. So the compliance burden gets bigger and bigger for small businesses, where you're spending more time having to worry about that. And then the fear of getting it wrong. So obviously HMRC have never been the politest about kind of talking about fines that are available. Miss your tax return, you get a fine. Miss your RTI return for payroll, you get a fine. So actually the fear of missing that and incurring costs is enormous. And then we refer back. So we touched on kind of it's being difficult to run a small business, but actually one of the really difficult parts of it is accounting. So if you didn't train as an accountant or bookkeeper, you're not expected to know it. And hopefully if anyone's used Xero, they'll understand that it's written for small businesses and much easier for people to pick up, but it still has core accounting principles in it. So there's a learning curve to get on over. And we know that people still have a challenge, because 20% of invoices that are entered into Xero as a sales invoice aren't actually a sales invoice, so someone has to go and fix that. So that takes time for someone to go in and do that. When we ran this data a few months ago, we looked at all of the corrections that were being made in the system, and there were 1,500 invoices that were posted to sales that were actually an expense. So people are making what I guess we would deem as basic errors, but they're only basic if you know it's an error. If you don't know, then you're just posting stuff. And actually, when we did a survey on some of this data and asked, so why are you posting that to sales, quite often we got, well, it was at the top of the list, so I just picked the first one. So there are really simple reasons why people are doing that. So what we need to do is start to figure out how we use the technology to address this and make this so much simpler for small businesses. And that's where machine learning or artificial intelligence comes in. And they're the buzzwords right now at the minute, so we won't go into any detail there, but kind of simplify that, and it's all about how do we make the day-to-day role of bookkeeping, accounting, running your business as simple as we possibly can for you by removing as much manual work and automating as much as we can. And raising invoices is a really good example of that. So if we know that people are entering the wrong account code, they're entering sales or they're entering purchases or office expenses when it isn't those, then surely we should be able to do that automatically for them. So when you go into the system and you type in stationery, at the minute you're going to have to post that to office supplies or whatever that is. That just sounds ridiculous. Like if you put stationery in there, we know where it's going to go. The system should be able to just automatically post that for you. So it starts to get easier and quicker to run your business. So you're raising an invoice and it's automatically allocating that out for you. You can see that there. So what we start to do is remove some of the complexity that sits within an accounting system and actually make it more of a business tool than accounting. Actually, it's there. You enter the information because the information you then get off the back of it becomes really valuable to you as a business owner, but you don't worry too much around the detail and the ins and outs of it. So you'll see that there. We've started to remove a lot of the information that may cause some complexity. The next thing is on the bank reconciliation side. So like I say, if you're running an accounting system, you know you've usually got to go in and allocate out all your transactions and say, well, that was a sales invoice, so we'll match that, we'll post that to sales. That was office expenses, so we'll post that there. And that takes time to go through and tick all of that stuff off. But what we've been running in the background is a really simple tool and method that will automatically reconcile this information for you. So we can get 90% accuracy at the minute. Through the system with it automatically reconciling the bank. And if you're not familiar with Xero, and I will touch on this in a little while, what we do is we automatically import data from the bank. So you don't actually have to go in and re-enter anything or upload a bank statement. Actually, it just sucks the bank statement data in each day. But at the minute, you're still going to have to go through and say, yep, that was office expenses. Yes, that was travel. That was rent. But now what we've got to is the point where you log in the morning and all of that stuff's already been dealt with for you. Kind of 90% of it. You're going to have 10% of your transactions still sitting there that Xero couldn't automatically recognize. But what's great about machine learning is as you start reconciling those, the machine will learn. So it actually starts to pick it up. So it's not 90% forever. The more you start doing it, you start to teach the computer to deal with that information. And that means we can get to the point where we start to move towards code-free accounting. So you don't need to worry about the data. All you need to do is worry about inputting in invoices, purchase invoices, expenses, and the system will start to do the rest for you. Then the value and the information you get off the back of that is hugely beneficial. And that's the beauty of the internet and technology and cloud companies is we're able to take functionality that 10 years ago would have only been available to huge businesses and deploy it across millions of small businesses around the world, which is hugely valuable. And this is how we kind of see the vision, either on a watch or a phone, however it comes in, but actually you're not going in and doing lots of work, but you're just getting notifications that's telling you got £12,000 last night from your projects, you've got 4 invoices ready to approve, payroll needs signing off. Actually, it's just starting to come and notify you and tell you what you need to do to run your business. So the great news is small businesses finally start to get access to great products and services that they can use that gives them the same level of opportunity, the same amount of automation as much larger businesses would have already had. But there's one thing that every single business typically has in common, and that's the need to get paid. It's one area that we're really keen to try and make better. We already know that small businesses are relatively lax at paying invoices often, so how do we make that simpler for small businesses to interact with each other, to get larger businesses to interact, so that you can then collect monies really simply. So I'll start to move into a little bit of our ecosystem side of it. So we're an online accounting company. We don't do CRM, we don't do point of sale, we don't do anything else because we wouldn't be very good at it. The future and the way that we see the market is being able to build your own back office by selecting best of breed online products that then talk to each other. So you update an address in one, it updates in the other. So whether that's your till system automatically sucking data in, or you're a tradesperson and you're out and about invoicing on the road, and that's then being pulled into the system. So there's hundreds of different scenarios, and there's over 500 different apps just there that will deal with that. A lot of those fall into that kind of payment space. So we'll start to touch on like digital payments and how you can get paid faster and how you use the tools within Xero. So there's a few benefits to digital payments over kind of manual payments or even just like sending physical invoices out. So actually we're reducing the friction to get paid. Well, if we know that people are lax at paying the bills, let's make it as easy as possible to get them to pay us. Increased reliability and security just there. We're not kind of sending like cash checks, anything like that around and about. Actually, it's all being delivered via the internet, via payment solutions. This data then all feeds in real time into your bank reconciliation. So as quick as you get paid, the next day it's sitting with your accounting system. So actually you're keeping on top of your credit control. Actually, credit control becomes fairly minimal if you're doing more electronically because it's all just happening in the background. And you can provide a better customer experience. So if we want people to pay, we need to make it easy for them to pay and make it simple, make that experience really, really great for them. And there's a number of different ways that businesses and Xero customers are collecting money. So face-to-face, so I'll touch on a few of the different solutions in a minute, but there's like card reader apps that you can use where you can go on out, wherever you are, you've got a little card reader device and you can collect money. My oven cleaner, actually, true story, a couple of weeks ago, usually they come out, the window cleaner gives us a little card and we have to log on and go and pay them. The oven cleaner came out, he cleaned the oven, he spent an hour there, and I assumed that he would disappear and I wouldn't have to part with any money whatsoever for a few weeks. And he pulls his little iZettle device out of his bag and collects the money there and then, like off a debit card, really simple, really easy, but he's now been paid, so he's earned that money. And he's a small business, it's 2 guys building a local business, but collecting money there and then on the point. It's great for me because I don't have to have the hassle now, but even better for him because he's got that money. E-commerce, so through the internet or a website where the card isn't present. Direct debit, so bank to bank. Direct debit, actually, we're a global business, and direct debit is huge in the UK compared to lots of other countries. So a great way, and there's some really good apps that allow you to set up direct debits without a lot of hassle and get that process moving. And then invoicing where the card isn't present, so what we would call online invoicing, so maybe using a payment gateway to collect money via the invoice. So let's touch on point of sale. So there's around 3 million businesses in the UK that currently don't accept card payments. But 1 in 6 British shoppers will only pay with a card. So those two numbers don't quite correlate that well together. So basically what it's saying is most small businesses need to have the functionality to accept card payments. But historically, it's often been kind of quite difficult, quite expensive to accept cards. So these new age products, these new companies that are kind of innovating in that space are making it much more efficient and much more affordable for every business to be able to accept card payments. iZettle was a good example of that. So it's allowing businesses to kind of take money, record it, integrates with Xero, so it feeds all of that data directly in. So as you're collecting money there and then, that data is then feeding into Xero so that you can keep up to date with your bookkeeping. Bookkeeping now doesn't need to be a monthly, quarterly, annually type process. You can do it on your mobile phone. Average Xero customers get 5 to 7 transactions a day, so it's not huge. Going in, keep up to date with your bookkeeping. The value of that then is that all your information, the reporting you get out the other side is up to date and accurate. Square, so you may be familiar with Square, so they're a payment processor, kind of an innovator to the kind of PayPal type of market. But they've got a connected app that runs through point of sale systems or through e-commerce websites. It just allows you to take card payments really simply, but their barrier to entry is really, really low. E-commerce. So in 2016, e-commerce was a £133 billion industry. Like, it is huge, absolutely huge. But when you look at like lots of these websites that are out there, they don't make it necessarily that simple to collect money. So the goal is, if you're running a website business and you're collecting money on it, how do you make that experience as simple as possible and make that payment as easy as you can? Shopify is a great example of that. So a really, really great app that will be your kind of web store, and then you can connect in a number of different payment gateways, sell products and services online, and collect money really, really quickly. The beauty is that then at the end of the day, all that information is going to transfer from your Shopify store straight into Xero. So again, you're up to date. You're only ever kind of a day out of sync as you keep up to date with what's going on in your bookkeeping. Whereas traditionally retailers may be running the kind of ZZ readings at the end of the day, and they've got receipts and they're kind of keeping a hold of these, and then they're doing their bookkeeping periodically. So it's just a much more efficient way of dealing with that. Direct debit, so we've touched on that. Bank-to-bank payments, it's kind of different to standing order, but often more complex to set up, so people might default into standing order. But great for recurring businesses, subscription-type businesses, anyone that's billing maybe monthly or quarterly. So a great solution for that. There's a product called Go Cardless that allows you to get that set up, all done online, really, really simple. All the mandates are done online. So if you're looking at direct debit and you want to get direct debit set up, then it's a relatively simple way to do that and connect it in with a new accounting system. And then one of the big areas we saw an impact was what we call online invoicing. So before all of these, these gateways and other products were available, we rolled out what we called online invoicing. So you'd send an actual PDF, not through the post, but through an email. And on there, you'd have a little link that just said pay now. And you'd click the button and you'd be able to go through and pay. So that was the idea. The nice thing is then that you connect in one of the payment gateways. So these are the kind of, 3 of the more popular ones. There are others, you may well be using them, or there's other options there. But Stripe, PayPal, and Go Cardless. What's really nice is you're not limited to one. So you can give people different options to pay. So if they've got a PayPal account, it may be easier for them to do it on PayPal, or if Stripe's the simplest way to do it, they can do that. So options around collecting money. But Stripe then allows them to pay kind of using their debit or their credit card. Xero will find that transaction and match it. So really, really easy to start to collect money and deal with it. PayPal, kind of similar. You either have a PayPal account or you pay and it draws it out of your bank account. But you can set up that automatic feed from PayPal that comes in every 6 hours. So every PayPal transaction you'll receive in every 6 hours, your accounting system's getting up to date. So if you've got a business that's maybe high volume, because you're using lots of e-commerce transactions, then this is great because you can start to keep on top of what's coming in kind of 4 times a day rather than even once a day. And what online invoicing did for our customers was knocked a third off of the average debtor days. So before we rolled it out, we did some work looking across the kind of top level data, and it told us that the average debtor days for a Xero customer at that point was 43 days. 12 months later, or kind of I think 15 months later, actually, we reran that data after we'd rolled out online invoicing, and what we saw was the debtor days for our customers on average had dramatically declined, which was the goal. So now small businesses were getting paid faster in general. And that was a huge success. Just online invoicing just seems to be a core function, and if you're a Xero customer and not using it, you should do, because it's going to drive down that time to get paid, which is hugely valuable. So, a few reasons why we might then look into business finance. I'm going to start to move into that side. So that's payments. The other side of it is, if I'm a small business, how can I raise funds should I need to? And our experience has been, and certainly when speaking to customers, is if you're a bigger business, then it's not too difficult to raise finance, but if you're a small business, it can often be quite difficult. But it may just be to bridge cash flow gaps, you may need to purchase more inventory, you may need to invest in growth, it might be people that you need to invest in. So there are lots of reasons why. Cash flow forecasting is a function of being able to stay on top of that. Xero has some of that functionality, but you can take it further with the ecosystem. So if that's important to you, then you can look at cash flow forecasting. There's a few of the solutions that do it just there. I won't touch too much on that because I want to start to talk about the other side of it, so the integrated lending side. So our vision for the next kind of 5 years is to start to shake up that lending market by working with the banks directly and also with what we call alternative finance companies. So we want to make sure that we can streamline the online application. So we make that simple. So actually there's not lots and lots of human interaction. You can use the technology and the data that exists to make good decisions, and the bank can use that as well. The lender then gets access to the Xero data to assess risk. So actually that's one of the big challenges. It's actually, is this a risk, is it not? There's no better way of assessing that than being able to look at your accounting system that's been verified by a qualified accountant to say, yep, it's up to date. So any data you're pulling out there is going to be really accurate. You may get a faster decision. So one of the challenges is the speed of actually being able to raise money, which is why a lot of these alternative finance companies have kind of grown, because they just make it simple and quick. Finance on exactly the same day that you apply for it, for example. And you can easily track the repayments and the interest. So you can keep on top of the finance that you've raised. So what are the different types of business finance that we've got? So invoice finance, one example, line of credit, a business cash advance, and business loans. They're kind of the 4 key areas that we see. There's solutions for all of these, whether it's Satago or Market Invoice, Liberis, iWalker. These are all kind of alternative finance solutions that will allow small businesses and larger ones, should they want to and be on Xero, to draw down funds based on the information that they've got in Xero. The other side of that is the relationships we've got with the banks, where we're feeding in bank statement data from 90% of UK small businesses. So whoever you bank with, whether it's NatWest, Santander, Barclays, you'll be able to set up a direct feed within Xero. That means each day your bank statement data from yesterday just gets pushed into your accounting system. The minute you've got to reconcile it, kind of you know where we're going with the automation, but you go through and you keep on top of that. So no more importing bank statements, no more paper bank statements and re-entering information, hopefully. Use the technology, use the tools that are there to automate that workflow. And then it takes us on to the financial web. So when we start to talk about lending and payments and how we see that market going for us, we have a real desire to work with the banks and are doing more and more of this. The challenges I think we've had in the past and small businesses have had is quite risky lending to small businesses. We know the survival rates of small businesses, so automatically you know there's a risk just there. It can be fairly costly to lend on volume to lots and lots of people, relatively small amounts. From the small business perspective, it's too slow. And often the return for larger financial institutions is too small. So what ends up happening is big financial institutions often connect with small and large businesses, and small businesses get a bit of kind of the rough end of the stick, which was the same for the accounting software market for them for quite a few years. So then we start to use that information and that data to monitor, to alert the bank, and to be able to allow the bank to make accurate assumptions and decisions based on risk. So what you'll see here is Xero is then connected into the bank. The advisor's there to kind of sign off and approve the information, but effectively you've got that connection. So there isn't a cumbersome process to go through to start to draw down on finance. Because what was effectively happening, and what we saw from our customers and the feedback we've had, is kind of on this, your left-hand side, you've got the small business side, so actually the access to capital element. On the opposite side, we've got the financial institutions or the financial services business that are trying to support all businesses. But we'd moved into where the kind of non-bank lending was starting to grow, but it's still a really minimal element of what's going on. And the goal is to say, well, the alternative finance stuff is there. It's usually there for if the bank can't lend to you for one reason or another. But what we want to get to the point is where there's this big overlap between small businesses and big financial institutions being able to lend to small businesses. So a huge opportunity to work closer with them so that we can make lending easier for the banks and more accessible for small businesses, whilst still growing that alternative finance element or area there, because there's huge value in that also. And then when you start to look at the old way of how data moved through the business, you'll see that you had bank or supplier or customer information coming in. Someone had to deal with that. It went into desktop software, either within the small business or the accounting firm, or bookkeeper may be entering it in there. Someone's got to reconcile all that information, and then financial reports are produced, or a tax return set of accounts, the kind of compliance side of it. And at every single stage through that process, there was somebody involved and there was an audit or sign-off kind of process. It's really, really cumbersome. The same as we're talking about the troubles with raising finance, the bookkeeping element was exactly the same. It's just like wasting time on things that could be so much easier. So with all the automation and with the technology and the bank fees that are coming in there, then this evolves and completely changes. Gets us more involved with what's going on in our businesses. We get more excited about the numbers. That sounds crazy, but it's true. We see more people just really kind of indoctrinated in what's going on within their business, because now they've got access to the numbers. Their accountant can guide them through what they actually mean, but just really people just really enthused about their finances and their bookkeeping. So here we've got your invoices and your sales and purchase invoices. You've got your bank statement information all being fed directly into Xero. So we're automatically skipping out a step just there. And the nice thing there is your advisor and you are collaborating on the same system. So there's no, you've got a desktop system, they've got a different one, you give them a USB stick, they can't open it. However that works, it's you're all accessing exactly the same information. So you can log in and both see exactly what's going on. So your advisor can check that data, they can correct it, they can sign it off, and then quite simply take it through their internal process to produce a set of accounts or a tax return there. So we're really starting to streamline and systemize that process. So it's automated, it's not manual, and the integrity of the data is really high because it's being fed in straight from the bank, removing the opportunity for manual errors to happen just there. So good quality data, good quality information to make good quality decisions within your business. And that's why you'll see, and I'm just about to wrap up, the huge growth that we've had in the financial web side of our business. So all of these products here and all of these companies, they all exist within our kind of financial web ecosystem. A large proportion of these businesses didn't exist 3 years ago, so innovation has really struck the financial services market. But what's really encouraging for me and our business is the likes of the big banks, so Barclays, Lloyds, Santander, NatWest, RBS, all starting to come to play because they also want to be able to service small businesses better. That's really, really encouraging.